Hello and welcome back to Explain the Charts, where we break down the news and analyze the charts for you. Today is November 14th, 2024, and we're taking a look at GBPUSD, the British pound sterling against the US dollar. The recent news has been bearish for the pound, with the UK labour market showing signs of weakness and inflation remaining elevated, raising concerns for the BOE's ability to address economic challenges. The US dollar has been gaining strength on the back of rising inflation, although the Fed is expected to cut interest rates in the coming months. Let's start with the daily chart, covering the past year of price action. We can see that the pair has been trending downwards since August, breaking below key support levels, including the 200-day moving average. The recent decline has been particularly sharp, with GBPUSD plummeting over 3.2% from its monthly high. The bearish momentum is clearly evident, and the pair has now broken below the 1.2735 level, which had previously provided support. Looking ahead, the next key support level to watch is at 1.2571, followed by 1.2423 and 1.2337/49. However, if we look at the 1-hour chart, zooming in on the recent price action, we can see a slightly different picture. While the pair is still trading below the 200-day moving average, we can see signs of a potential price inflection within the 1.2571 to 1.2613 support zone. This zone is defined by the 61.8% retracement of the 2023 advance and the June/July swing lows. If the price manages to hold above this zone, it could indicate a short-term rebound. However, if the price breaks below 1.2571, it could trigger accelerated declines, with the aforementioned support levels likely to come into play. Let's move to the 15-minute chart, which shows a more granular view of the current price action. We can see that GBPUSD is currently trading in a tight range, with a clear resistance level at 1.2773. If the price rallies back above 1.2773, it would suggest a short-term bullish bias. However, if the price remains below 1.2773, it would reinforce the bearish sentiment and suggest that the pair is heading for a larger breakdown. It is important to note that the price is currently reacting to the release of key economic data, including UK GDP and US retail sales. The next significant event on the economic calendar is the UK inflation data release, which is scheduled for next week. This release could have a significant impact on the GBPUSD, as it will provide insights into the BOE's policy outlook. In conclusion, the GBPUSD is currently in a state of flux, with bearish sentiment prevailing in the long term, but some signs of a potential short-term rebound. The key price levels to watch are the 1.2571 support level on the daily chart and the 1.2773 resistance level on the 15-minute chart. The price is likely to remain volatile in the short term, driven by economic data releases and central bank decisions. If the price breaks below 1.2571 on the daily chart, it would signal a strong bearish trend. Conversely, if the price rallies above 1.2773 on the 15-minute chart, it could indicate a short-term bullish reversal. Traders should keep a close eye on the upcoming UK inflation data release, as it could provide further clarity on the GBPUSD's direction. Ultimately, the GBPUSD's future path will depend on the interplay of economic fundamentals and technical signals. Stay tuned for more analysis and updates on Explain the Charts.